What is going on, family? My name is Nteteng Matunyani, presenting the Who is a Man podcast to you, where we will tackle the issues faced and caused by men with the intention of learning from them to not only help men become better men, but to mentor teenage boys and young male adults to become more matured, respectful, respectable, grounded, regal men, and to rediscover our true identity as designed by God Himself. Folks, the moment that we have all been waiting for is finally here. Welcome to episode 3 of our Financial Matters series. Today, we will be delving into the secrets of real estate investing, an empowering journey that holds the key to your financial breakthrough. Real estate investing isn't just about finding a place to call home. It's a strategic avenue to pave your way to substantial wealth. As we embark on this adventure, remember, this is all about acquiring properties with the explicit goal of reaping financial rewards. Now picture this for a moment. The promising prospect of capital growth in the vibrant South African property market. It's not just an investment. It's a front row seat to watching your wealth grow and evolve over time. The ever-increasing property prices add a thrilling element to the process of building your financial portfolio. But wait, there's more. The allure of real estate investing in South Africa extends beyond mere appreciation. The market's high level of liquidity adds another layer of appeal. Imagine the flexibility of selling your property whenever you choose, confident that a favorable price awaits. See now, this flexibility is what sets real estate investing apart, making it a dynamic and rewarding endeavor. Today, we are in for a treat as we are joined by a good friend, a fellow brother in Christ, and a rising star in the real estate industry, Goitse Motloba. He is on a journey to set himself apart as a giant in property development and aims to be the best property development manager in the world. Stay tuned as we uncover the secrets to success in the world of real estate investing, where each property isn't just a space, but a potential cornerstone for building generational wealth. Mr. Motloba, could you briefly just share your journey in property development and what actually inspired you to become a property development manager?
My property journey actually started when I was in grade 12. I read a book. I think most people that actually got into property start off with that book. It's called Rich Dad Poor Dad.
Rich Dad Poor Dad, Robert Kiyosaki.
So I read that book. I was very inspired by it. Found out that some of the wealthiest people in the world are in property. So I kind of figured, look, if I want to be wealthy, that's the way to go. So I started watching videos on YouTube and found out about a whole lot of things. You're wholesaling, you're flipping, all these crazy creative ways to make money in property. Long story short, I thought that for me to get into property, I have to study something like construction management or QS. But things sort of aligned in such a way that I ended up studying property. So I got into a BSc in property and I just finished my honors last year. So when I got into my studies, I actually wanted to get into investments. But as I learned more about the industry, I figured, you know what, I think developments might be my thing as well.
Okay.
So, at the moment, I'm working in a property development and services company. And my current role at its full maturity is a property development manager. So, it's very excited.
What a story, man. So, I just want to track it back a bit. Independent of the book you read in grade 12, is this really the position that you thought you'd find yourself in today?
Yes. Crazy enough. Crazy enough, yes, it is, because I always knew, first, you don't need a degree to be in property.
Okay.
Right, so let's start off there.
Yes.
I was forced to study actually by my parents, so I kind of figured, why not study something that, it's an industry that I want to be in either way.
Okay.
So, yeah, like, as I mentioned, I found all these creative ways to make money in property. Crazy enough, I am busy with all those things right now. And I did make a decision to go into developments. Investments was another option for me. But I had like a strong interest in development since, I say, second, third year. So for me to be in developments now, I'm living a dream, man. Like it's absolutely insane.
Come on.
It's ridiculous.
It's all alignment.
It's alignment. It's positioning at its finest, honestly speaking. It's God's grace.
Just thinking about just property development and property investing, a big thing, or rather a big factor to consider in that endeavor is a solid financial background. Right. So in the fast-paced world that we live in today, understanding the ins and outs of real estate is like having a secret weapon in your financial arsenal. So let's just quickly chat about how crucial it is to really have a solid financial education for real estate investing. And in your experience, where do individuals often lack knowledge in property investing?
Okay. So we're speaking about, let's say, financial literacy, right? There are two aspects to that. Number one is the mindset side of it. So I think being in property is a very long-term, it's a very long-term thing. Even when you're making short-term gains in property, it takes 3 months for property to transfer. So, yeah, you can imagine if you are, say, even like an estate agent, if you were to find a property today to sell, you'll most likely make money out of it in like 4 months' time. So it's not quick gains. So I would say the mindset it's a big thing. Second of all, then you get the actual knowledge and skills that you have to acquire. And knowledge being, you have to understand that when you buy a property, this is something you're going to keep for a very long time.
Sure.
And you have to take care of it as like a baby, right? So the basic things such as rates and taxes, lights, water, that you have to pay for if you're buying a property. With the rental property, it might be a bit different, right? So your tenant might be paying for their own water and electricity, but you will still be liable for the rates and taxes amongst other things. So if you're going to build a portfolio, you need to understand firstly how the feasibility will look and understand what type of returns are you looking for when you buy in that property as well, right? So that's the knowledge side of it. And what this boils down to is you need to understand your, number one, buying costs, right? So when you buy a property, you get your legal costs, i.e. your transfer costs.
Sure.
Right? And you can break down your transfer costs into so many other costs as well, right? If you're going to get a bond from the bank, you get your bond registration costs, right? So these make up your buying costs. This is the initial capital that you have to put down to acquire a property. It doesn't have to be your money, right? It doesn't have to. That's why we love property so much, because there's so much leverage in it. But you still have to understand that basic principle. How much money are you putting down to actually acquire this property? In addition, I did mention it's like a baby, right? It's something you're going to have to keep for a while. You're going to have to nurture it, take care of it, maintain it. So you also have to keep money on the side. Once you acquire the property from your rentals, keep money from the side for your rentals. Okay. You have to pay your rates and taxes. If this is a business you're running, you'll probably have a property manager who's taking a percentage of the income, right? He's in charge, or she is in charge of collecting the rentals, in charge of the overall upkeep of the property, just overall property management. And amongst other expenses, really, if you're running a student accommodation, you might have Wi-Fi in there, right? So you need the knowledge, number one, because without the knowledge, you will get burnt. There's no other way. You're going to buy this property
For sure.
for 400,000 Rand. They're telling you the rentals are 5,000 Rand. So you're like, oh, I'm going to make so much money. My bond is 4,000 Rand. You will get burnt because there are other costs included in your actual holding costs.
Sure.
And ultimately, if you're looking to build a portfolio, you need to understand how you get the returns you're looking for. We're speaking on skills as well now.
Yeah.
To actually acquire property.
Okay.
How do you acquire properties? Are you going to speak to brokers? Are you going to be knocking at doors? You know, there's certain skills that you need in that, communication skills, right? We spoke about the legal costs, right? So how do you communicate with your attorneys, right? So there's knowledge in that, but there's also skills in it as well. Communication is a big thing in property. So you need to be able to articulate exactly what you are looking for. So financial education or financial literacy is a big thing. If you don't have it, you will be burnt. And I always recommend, if you're getting into property, educate yourself, and you'll save yourself a lot of time if you actually work with someone that's done it before.
Sure.
But yeah, it's that's just the tip of the iceberg. But yeah, it's very critical.
I think you said a mouthful, right? And there's something quite interesting that you mentioned earlier. And you said you don't have to use your own money. Can you elaborate further on that?
In business, right, we get this concept of leverage. The two types, right? Or let me speak on two types. There's time and there's money. I spoke about a property manager, right? If you are a property investor, be a property investor. Don't be a property manager, right? We want to teach you how to be a property investor. You're going to learn principles of being a property investor. You don't manage properties. That's not your job. So what you want to do is you want to leverage someone else's time and knowledge as well, i.e. the property manager, and let him do his job to ensure that your property has tenants in it and it's kept well, essentially, and the rents are being collected, you know. So that's, I would say, leveraging someone else's time, leveraging someone else's knowledge. So I was going to speak on two, now I'm speaking on three. But we also get leveraging the money as well, other people's money. So think about properties, you don't have to use your own money. There's something called sweat equity in property.
Sweat equity.
Yeah, once you understand sweat equity, I think the game changes. It becomes a bit more fun because you realize that the people out there that have money but no time.
Sure.
The people out there that have time but no money, that's you. You don't have money, you know?
Well, that's why we're here to learn.
But we here to learn, you know? I know it's a touchy subject or a sensitive subject for most people. If you have the knowledge and the time, you can leverage that by working with people that have the time but no money. So you can put in the sweat equity, meaning you're gonna work, you're gonna package the deals, you're gonna find the deals, you're gonna do everything. But because you did all that, you can either get a fee out of it. There's some knowledge you need to have around that, you know, your PPRAs, etc. I don't want to get too technical, but the principle is there's a thing called sweat equity, which is basically where you leverage your own time, your own knowledge, and you can speak with people that have the money and they can back you financially to actually do the investing. And as a return, you can get a fee or you can get equity in the deals.
Okay.
So that's usually what small players do. Okay. They come in and they do a lot of work.
Okay.
But, you know, like I said, it's a long-term thing. You won't get a payout in a month, maybe not in 2, maybe not in 3. In the long run, if you keep doing this, you build a solid foundation for yourself and you really get to put yourself in a good position.
So if I understood what you said correctly, I want to use an analogy and then you'll correct me if I'm wrong. So what you're basically saying is, say for instance, I am into baking and I want to sell cakes, but I don't necessarily have the means to actually make the cake myself and to sell it, right, for my own benefit, to make an income. So what you're saying is, what I could do is potentially go out, look for the key ingredients that would make the perfect cake, and then find people that are interested in the similar thing that I'm trying to do, which is to sell cakes. Present them with these ingredients that would make their cakes be more lucrative, more attractive, and more alluring, I would say. And by having them purchase those ingredients to get the cake that they want, I could then get some sort of income based on the total income that they made from the suggestion that I just made.
Yeah, so the 2 points there. Number one, the money to buy the cake, right? So you can get someone to actually, say, sponsor you, an investor, a parent even, they can give you capital to actually go and buy ingredients because they've had your cake. Your cake is amazing.
Sure.
Right? And you can be like, look, I don't enjoy making cakes, but I'm good at it. Then, it's essentially finding people that do enjoy making cakes and they can make the cake for you. So in relation to property, that analogy you just made now is, I have this knowledge. I'm going to put together a team. This team is going to help me find deals. We're going to package these deals. I'm going to find an investor and we're going to build wealth together. That's essentially what it is. So what you're doing in that sense is you're leveraging your own knowledge against other people's time and capital.
Now, evidently, you do have a wealth of experience in property investments and property sourcing. Now, today, you are recognized as, I would say, a property development manager. So I want to find out from you, what advice would you give to someone who is starting their journey in property investing for achieving financial breakthrough?
That's an easy one. Learn and find someone to help you. I'm actually reading a book now. I would love to recommend it to people. It's called Who Not How. But it basically speaks on, we limit ourselves by thinking how we should get things done. And it's been a huge paradigm shift for me as well, because I've had certain goals that I've been keeping on the back burner. I've been procrastinating because I keep thinking, how am I going to get this done? How am I going to get this done? I don't have the knowledge to get this done. But what this book has done for me is it's helped me come to the realization that sometimes you don't need to know everything. But instead, I'd say think of it from a perspective of, who do I need in my team to help me do this? So the reason why I mention this is, I save myself a lot of time by finding someone to help me early. Right? If I had tried to watch YouTube videos like I was and read books like I was, these things are good. But there's a strategy, there's a plan out there. And I can tell you, if you do this, and this, you're gonna get this. You know what I mean? So find people that have done it before and learn as much as possible, be teachable, and let them guide you on how to do it. Yeah, you might have to pay. And people don't like to pay, but look, man, there's a price. You know what I mean? Like, nothing's free.
Sure. It's essentially investing in your own future.
Yeah, there's a tuition fee in everything, man.
Yeah.
If you don't pay someone else, you're gonna lose money, and I mean, you will pay the price. You must just choose where you're gonna pay it. Essentially, am I gonna pay someone to teach me, or am I gonna go out and do it by myself and get burnt? But everyone pays a price. Like bro, you will pay the price.
You know, as you're speaking right now, I'm reminded of something that Steve Harvey once said. He said, being poor is hard, but being rich is also hard.
Everything's hard.
So you just need to decide which hardship you want to take on.
Yeah.
With that being
Exactly
said,
that.
ladies and gentlemen, sit tight. We will be right back. Now, property is very broad, from residential spaces that echo with daily life to commercial hubs buzzing with business. So that obviously now opens up a wide variety of investment property types that one can pursue. Can you just elaborate more on these various types of property investments that a person can pursue, and just briefly discuss which options that a beginner should actually consider?
I'd say the easiest market to get into would be residential. It depends on an investor though. Some people prefer buying houses, some prefer buying townhouses, some prefer buying apartments. It really depends on you, right? Affordability can play a role into this. Maybe you want to start off buying a single apartment, right? That's okay. Maybe you want to go and buy a house close to, an educational institution, and you're gonna turn that into student accommodation. Some people do that as well. So it really depends on you. But I would say that if you're entering into the market and you're a first-time investor, the easiest one would probably be residential. However, it depends. I'll give you an example. If I have to decide now what I'm gonna buy apartment blocks. Right, but then you might have someone else that will say, I'm gonna buy a small retail center. I'm gonna buy an industrial building. Industrial has been performing really well. It depends on you, man. Like it's very difficult to give you a straightforward answer on that. I think each person must do their own research, and this is not financial advice, by the way. I'm not trying to. But yeah, like you have to do your own research and just find out what resonates more with you, like what excites you. If you prefer dealing with the business, then go for your industrial, go for your retail. Offices aren't performing well at the moment, but if they were, then you can look into offices, you know what I mean? But if you feel like you would like to center your business around residential, you can go for residential.
And also, of course, just looking at where you are financially and what you can actually afford.
I'm tempted to say yes, but we've already discussed the whole leveraging other people's money and the relationships. Look, if you want to speak on it I see it as a limiting belief, but if you want to speak on it from that limiting belief, then yes, affordability plays a big role, right? And that's why you're going to start off with an apartment. But if you are to go out and network, and you're going to meet people, and you're going to shake a lot of hands, and you're going to invest in your own knowledge, your own resources, relationships, etc., and you make yourself a giant in this space. I believe you can come in and you can probably start off at maybe even 10 units. It just depends on how you position yourself ultimately. It is difficult. I'm not saying it's easy, but it's possible, and that's really what matters at the end of the day. Is it possible or not? If it is, then if you want it, you make a plan and you make it happen. You know what I mean? When you do your research, look into which asset class is performing, understand why that's the case, right? So I can tell you, I don't know if any developers out there developing office space. There's low demand for office space, right? To my knowledge, and what I'm seeing practically going into office spaces. We know why, right? But it might not be wise to go and invest in offices unless you have like a solid business case and you can justify why. But to my knowledge, I haven't seen a reason to invest in office space. But like I mentioned, industrial was performing really well, or has been performing well. Residential is residential. You're always going to need a roof, So obviously, depending on which market you get into, the price, that you enter the market at, and all these different factors, you can back it however you want, but it's very research based, I would say.
You touched on something very, very enticing. You mentioned a self-limiting belief, Right. I know in other means of creating wealth, such as trading has been a very popular means of pursuing wealth. I've heard people say that trading is 90% psychology and 10% fundamentals, right? I want to hear from you. How has psychology shaped your way of approaching property investing?
So what I hear a lot is that you're young, so you can't invest in property. You're young, you don't have the money. Why are you trying? Why are you looking for apartment blocks? That type of thing. and I mean, that's fine. But psychology for me it's essential. Like, it's something that you have to work on. You have to really sit down and identify through introspection what is holding you back. And I think once you can find out what it is that's holding you back, it might be emotions, it might be certain thought patterns, whatever it is. But once you sit down and you can figure it out, start working on it really and educate yourself, because once you get your psychology in line, I think it becomes a lot easier to do a lot of things, man. Even when it comes to business, I can say I've had limiting beliefs, and I've overcome my limiting beliefs, which is why I'm saying what I'm saying now. And once you do these exercises, reading, listening to podcasts, your personal development, ultimately, it makes it so much easier to transform yourself, right? And to aim bigger, to speak with people who seem like giants to most.
Okay.
It gives you a different level of confidence.
Yeah.
And your walk changes.
Yeah.
You know what I mean?
Yeah.
So it's critical, man. You, at the end of the day, you have to work on yourself, and you have to continuously grow and evolve as a being. And I think as you do that, things become easier, you know? Or let me not say they get easier or become easier, but you become so much better that, the challenges that used to be big to you are now norm, you know what I mean? And it becomes very easy to handle those levels of stress, I would say. So
I must say, everything that you've said so far is very attractive, and I would say somewhat seductive. Amongst all the things that we've just discussed right now, there is still a very big and very intimidating elephant in the room that does need confrontation, and that is risk management. What are some of the risk management strategies that you've been exposed to in property development, and how could some of those strategies that you've been exposed to be of use for a property investor?
Okay, so property development is a different type of giant, man. Thing about property development is you work with teams of people. Your role is to essentially find the land, put the deal together, and you're leading a team of people, right? A team of professionals. So in terms of risk management, you have to understand the different types of risks. There's risks that we know on paper, right? I'll give you an example. We know that time delay is a risk that you can deal with or that you can encounter in development. Say you're developing a student accommodation. Student accommodations usually have to be, construction on them has to be done, or at least the marketing, let me say, of the student accommodation has to be done around November, December, August, say August or so, right? The reason why you have to start your marketing early is because you have a very small window for intake of students the next year.
Yeah.
So time in student accommodation developments is a huge risk. And you mitigate that from get-go. That means from you acquiring your sites, from you submitting your town planning applications, you need to make sure that your timelines are tight, right? And you need to have a solid team you're working with that understands these risks as well.
Speak to the investor quickly, because I remember you did mention that if you are a property investor, you should not be a property manager.
Yeah,
right.
Well, if you're a property investor, Your goal is to acquire your properties, build your portfolio, but you don't want to start managing properties now because that might not necessarily be your strength, right? Managing property, that's collecting rentals, that is vetting your tenants, that is placing your tenants, dealing with evictions, dealing with leases, you know what I mean? Like all these things, man. If you're not a property manager, if you're an investor, do what investors do, invest. And I would say, obviously, if your portfolio allows, right, which it should, get a property manager and let them manage the property.
Property that you purchase.
Yeah, that's such a strength. So unless as part of your business model you do property management, then I mean that's another strategy you can take. But if not, then just I'd say leave it to the professionals.
So far, I have picked up two main misconceptions that a beginner may somewhat falsely believe, which is number one, that for you to start investing in property, you need your own money, right? And then the second thing I picked up from you speaking is that as a property investor, you don't necessarily have to be on that property managing it. So what other misconceptions among property investing should property investors be aware of?
I'd say that you need to start small.
Start small.
Yeah. And I mean, there's truth in that to some extent, but not entirely, you know. And again, I think it speaks on the limiting beliefs again. Like, you will get people that tell you, buy one property, learn how to manage it. You're not managing the property. You know what I mean? You're an investor. Like, firstly, work on that. Work on being the best investor, right? What principles do you have to learn and say live by or follow as an investor? I would say if you can get those done, then number one, you can be, you know, the best investor you can possibly be, right? But also the idea that you have to start off small is not always true, because again, it depends on your strategy. It to some extent depends on the resources or relationships that you have. But leverage is a thing, you know what I mean? You can, again, use other people's money, you can use other people's time, other people's knowledge. So it's a relationship thing, right? And I think this is something I realized this year as well, that you don't have to do everything by yourself. Sometimes find the people that enjoy doing that activity and you focus on what you have to do to ensure your success. So I think if we can follow this principle, then it should make life a bit easier. And I know it's easier said than done sometimes, but everything is easier said than done. It's just a matter of, is it something you want to do? And if so, how do you get it done? You know what I mean? So, yeah, a misconception, I say that you have to start off small. I think build the relationships first, learn as much as you can. And I think you'll quickly find out that you don't have to start as small as you think you have to.
So to this point, it's a no-brainer. Property is indeed a long-term game. So if you go into property, you shouldn't go into property with the expectation of making a quick buck within the next week or two. Moreover, educating yourself and really taking the time to gain a good understanding of the ins and outs of the industry can and definitely will come in handy in your pursuit to building a solid property investment portfolio. Now, we know that even though that this is indeed a long-term game, there are some hidden bumps along the way that a few people can actually encounter, such as maintenance work on the properties themselves, fluctuations in the prime lending rate, and so on.
Yeah.
Now, arguably, the biggest hiccup that the industry has encountered so far definitely has to be COVID. COVID really had a negative impact on a lot of businesses and quite a few investors, which I hope you will be able to just briefly touch a little bit more on that with us.
Yeah.
And another hiccup to look into is the economic disadvantage that South Africa is actually currently facing, and that is load shedding. We have seen how load shedding has negatively affected a lot of businesses. I know of a few myself, particularly within the manufacturing space, that would lose close to 1.5 million rand per hour due to these power outages. So on a property level, I really just want to get your insights. What principles guide your property investment decisions in the ever-changing economic and real estate landscape? And how do you actually adapt to these ever-evolving market conditions?
Okay. So you mentioned a few things, right? Number one being COVID. COVID changed the game, man. I think it hurts a lot of real estate investors. It hurts a lot of businesses. It really changed or had a huge effect on how we approach property now, and it has definitely opened our eyes up to a different element of risk. So we know that in terms of COVID, there was extremely negative impact on offices. Again, right? I mean, that was just terrible because we had that whole work from home, and even till this day, there's still companies that prefer working from home. And then some implement a hybrid model, so I think if you are an investor in the office market, then you really have been forced in the corner. I know that some landlords or office owners, investors, have even looked to redeveloping their office spaces into residential because of exactly what we just spoke about, the extremely high vacancies. Because remember, with property, your operational costs are your operational costs, right? If the property is still running, then you still have to pay for all these different services. Your financing costs are your financing costs, right? The bank wants its money. That leaves you very exposed. On the brighter end, though, we did see interest rates drop quite a bit, and I think that was quite positive, especially for first-time buyers. So, I think when COVID hits, as much as it did hurt the property market, at least on the commercial side of things, as far as residential goes, I think we probably saw an increase in demand for properties because of those low interest rates. As of now, right, post-COVID, high interest rates, I think people that bought at those lower interest rates, they probably bought at higher prices. So now interest rates are a bit higher and they're probably feeling a bit of a pinch, which goes back again to the knowledge and, to answer your question, principles. Don't get too excited, number one. Right? So when those interest rates are low, don't think you're going to go buy at ridiculously high prices. I'm not saying everyone does that, but that's the thing. Take time to think about it. We did mention it's a long-term, investment. So you don't want to buy when those interest rates are low, and then you buy overpriced properties, and then it comes back to bite you because the market will correct, which is what we're seeing now. So that's COVID. That's interest rates. And then we get load shedding. So load shedding has also had a negative impact on businesses because, look, I mean, if you're working in retail, or if you're owning a retail, property, your tenants need electricity.
Yes.
If there's a Woolworths in there, if there's a shop right there, they have fridges, you know what I mean? And those fridges can't switch off. The stock will, it will expire. So that means now as a landlord, you need to come up with solutions to actually combat this load shedding. And I think the most common solution, if it's not solar panels, is generators. That's the capital expenditure or investment, right? The capital outlay to actually buy the generators. And then on top of that, it's the diesel to actually keep the generator going. That's extremely expensive, right? If we're looking at solar also has quite a high capital outlay. So it really pushes, landlords and investors into a corner, because these are solutions that you need to implement, but can your property afford it, right? And this takes me back to the previous conversation we had. I can almost guarantee you the person that owns 1,000 units is not feeling the pinch as much as the person that owns 10 units.
Sure.
The person with 1,000 units has more capital and can afford to pivot more when disasters hit. So when vacancies hit as well, right? If you own 3 properties and you lose 2 tenants, you're in trouble.
Yeah.
If you have 1,000,
Yes.
and you lose even 100,
you won't feel it as much.
Right? So that's where scale comes into play, and that's why I sort of challenge my own mindset. And I'm not saying don't aim small, and I know I'm not answering this question anymore. I'm not saying don't aim small. I'm not saying don't start off small, right? But what I'm saying is think big, right?
Start small, think big.
Yeah, think big, because if you can do big, then you also safeguard yourself against certain events, although there are certain risks as well in being big, right? But that's, I think, conversation for another day. I think I'd like to touch up on another element of risk that I don't think you mentioned, is NSFAS. So if you're in student accommodation, NSFAS introduced a cap on their NSFAS rates. So areas like Hetfield, where they were giving out 6,000 Rand in rent, I think they capped it at 4,500 Rand. You can imagine the impact that has on property values. Again, the operational costs are the operational costs, right? Your financing costs are your financing costs. So the costs remain. It doesn't matter what your income does. So in terms of principles that guide my investment decisions, look, I think you need to be adaptive. Again, I mentioned don't get too excited, and approach your investing from a long-term perspective, I would say. If you can do these, I think it should be relatively safe. But, the market is a market. There will always be challenges. But again, that's why you have to be adaptive. That's why you have to think long-term. And I think on the other end of being excited is fear. So remain calm as well when things are difficult.
Ladies and gentlemen, I think Mr. Motloba shared quite a lot with us, and I mean, there's a lot more that, especially you listening, if you are an investor and maybe you are considering on actually becoming an investor, there's quite a lot that I could say we could grab from Mr. Motloba's words, but there's also more things that you can do yourself. And with that being said, there are 2 main books I would like to actually recommend. The first one being Making Money Out of Property in South Africa by Jason Lee. You can find it online through Takealot, even in your nearest bookstore. And then the second book I would like to recommend is Achieving Financial Freedom Through Property. This is a book written by Lawrence Bowell. Or was it Bull? I have no idea. I do apologize if I am mispronouncing the surname. But do definitely check these 2 books out. And without further ado, just to close up this episode, I do have one more question for Mr. Motloba that he may not necessarily be expecting, but let's see how he takes it. And I want to share a verse from the Bible. For those who share our faith, the Christian faith, I hope that this would indeed be of good use to you. And the verse is from 1 Timothy chapter 5, verse 8, and it says, "But if anyone does not provide for his relatives, and especially for members of his household, he has denied the faith and is worse than an unbeliever." Having said that, how has your journey shaped you as a man, and why do you believe that this is indeed a noble pursuit for a man to try and achieve financial freedom which in your case would be through property.
Okay. I'm tempted to say every person. But I don't know, part of me is hesitant to say every person, but I think most people should venture into some sort of entrepreneurship because of the growth involved in it. Number one, you really are transformed. I can tell you, for example, while I was studying, there were days where I did not feel like working. There were days where my eyes were red and I had work to do, you know what I mean? Obviously academically, but also on the business side of things. And it was extremely challenging, but through that, I think I developed such a thick skin, you know? So I think one of the biggest reasons why I recommend entrepreneurship or, you know, people getting into business is because of who you become as a result of the adversity that you face. So as a young man, it's given me the opportunity to transform my mind. As a result of that, your habits also get to change. Say you get into the gym, you transform your body, right? So you transform holistically, and it's really just from one decision that you make. You know, you realize you have to be more productive, and for you to do that, you have to clean up your diet, right? So you have to tighten your routine to be more productive. You realize you need to work on your communication so that you can speak on, you can essentially elaborate on your vision, right? And you can speak to different teams of people on what you need assistance with, you know, so you really evolve in this journey. And that's the biggest reason why I recommend it. Even if you don't make money, do make money. But even if you don't, like, you know, you learn valuable skills, and that process of becoming is really invaluable, you know. That's that. Going back to the verse, leaving something for your family. Property is literally the perfect, you know, business for that, because no one's gonna come and steal your apartment blocks. Well, actually. No one is gonna legally steal your apartment blocks, you know. Yeah, I guess what I'm trying to say is no one's gonna come in with a bulldozer and lift the thing and go place it somewhere else, you know what I mean? Like it's there, you can see it, it's tangible. And there are a lot of really great benefits of investing in property, but just to stick to the question, just the idea of having something to leave behind for your family, it's just amazing. You buy this asset and it remains, you know what I mean? You just ensure your tenants are happy, of course, but as long as they're happy and your property is well maintained, the income comes in, you know, and the more you do that, the more you grow it, the income grows. It's a very simple business, man. Being in property allows you to reflect on that verse perfectly, because you're doing exactly that. You're leaving a legacy behind for your family.
Ladies and gentlemen, boys and girls, that was Mr. Motloba. Thank you so much, man, for your time. Thank you so much for sharing your wealth of wisdom with us. I really do hope that the listener has indeed learned a lot from you. Just tell us, where can someone find you to reach out, you know, with you, possibly do business with you?
Yeah, so you can reach me on, say, LinkedIn is probably the easiest one. Add my name, Goitse Motloba.
Goitse Motloba.
And goitse.inv on Instagram. And if you go on my LinkedIn, my email is there as well. So gmotloba1@gmail.com.
Fantastic. To invest in property or not to invest in property? That's the question, my friends, and the answer lies in your hands. Look, the major advantage is that rental properties can provide a steady stream of income, covering mortgage payments and all kinds of expenses. So, the more properties you have, the more your money works for you. On the flip side, investing in property is a significant financial commitment, and you may encounter potential issues with tenants. So, is property investment risky? Absolutely. Is it worth it? I truly believe so. Look, stepping into the property investment arena might seem intimidating at first, but it really doesn't have to be. If you do enough research and seek professional guidance, you can confidently dive into property investing and start building your portfolio. Evidently, there are many ways for you to achieve your financial breakthrough and create generational wealth. In our previous episode, we explored the promising realm of initiating and investing in businesses. If you missed it, please be sure to check it out. And as always, if you found this conversation insightful, please do share it with your loved ones and your colleagues. This is your host, Nteteng Matunyane, wishing you nothing but love, peace, and class.